In yesterday's video, I said that your money has power, and if you choose not to spend it, companies will react by lowering prices. And we have another example of that today, and it's a pretty significant one. Target lowering prices on 5,000 frequently bought items. Target said Monday it will lower prices on approximately 5,000 frequently bought items as it seeks to stay competitive amid signs consumers are experiencing price fatigue. The company said in a statement that the price cuts are concentrated in grocery staples like milk, meat, bread, fruit, and vegetables, as well as paper towels, diapers, and many cuts affecting its company-owned Good and Gather and Everspring brands. It has already cut prices on some 1,500 other items, and that's good to see because companies are responding to how consumers spend, and when the spending changes, the company also has to change. At its core, that is what's happening. Consumers are spending differently, and so companies are forced to react so that they can maintain relevancy and profits. But it's also good to know specifically why this is happening. And if you ask Target, they will put out some corporate BR bull that says, "We know consumers are feeling pressured to make the most of their budgets, and Target is here to help them save more," said Rick Gomez, Executive Vice President and Chief Food, Essentials, and Beauty Officer at Target. "Our team works hard to deliver great value every day, and these new lower prices across thousands of items will add up to additional big savings for the millions of consumers that shop Target each week for their everyday needs." They're positioning it as if it's out of the goodness of their heart for the sole purpose of helping those poor consumers whose dollars are being stretched thinner than ever thanks to inflation that's not really coming down. But I assure you, this is not why it's happening. They are not doing it because they are just good people trying to help out the poor consumers. They also said that these new price reductions are on top of their retailers' everyday low prices, and I can assure you, Target's prices are not low at all. I shopped there once for groceries, I think, and it was far too expensive for me to ever go again. Chicken at Target is $3.79 a pound, and right across the street there's an Aldi's that I normally shop at that was $2.19 a pound. Target is just not a great place to go if you are stretched thin. They're actually doing this for three main reasons. The first is growing competition, the second is weak sales, and the third is price exhaustion from consumers. So the first reason is competition, and competition here means that Target is actually behind the curve when it comes to lowering their prices. Other larger and cheaper chains like Walmart and Aldi have already lowered their prices, and Target is basically being left in the dust. When you think of cheap groceries, usually you think of Aldi's and Walmart. Those are the two big affordable grocery brands, and both of them have actually already lowered their prices, as you can see here. Walmart is lowering prices back to pre-inflation levels. Eggs, apples, and deli snacks will now cost significantly less. People are looking for deals as inflation continues to go up and wages remain stagnant, so they're gonna go wherever it's most affordable. And if they hear that Walmart and Aldi's are lowering prices and Target isn't lowering prices, people are going to go there less. Store loyalty means less than ever right now, and store loyalty certainly means nothing if you can't afford to eat. But it's not just Walmart, like I said, it's Aldi as well, and Aldi actually dropped it pretty significantly. Aldi drops prices on 250 grocery store items to help shoppers save this summer. Earlier this week, Aldi announced it will further drop its everyday low prices on more than 250 summer essentials for picnic necessities to barbecue basics, which the company says will pass on $100 million in savings through Labor Day. Aldi is always looking for ways to help customers save money, but with more experts warning of persistent inflation, the time was right to deliver even greater discounts on our already low prices for the second year in a row, said David Ronaldo, president of Aldi US, in a statement. "We don't want food prices to hold people back from getting together with friends, family, or spending time outdoors this season." Wages aren't going up, so competition is heating up for relatively fewer dollars that American consumers have in order to spend. And that's why these retail chains are dropping their prices. So that was the first reason, competition. The second reason is weakened sales forecasts. Basically, they're dropping their price because they're forecasting they are not going to be making that much money or as much as they would like to. As you can see here, Target on Tuesday posted, and this is from March 5th, Target on Tuesday posted holiday quarter revenue and earnings that topped Wall Street's expectations, but the company said it expects another year of weak sales. The Minneapolis-based retailer shares closed about 12% higher as it showed progress in boosting profits and margins. However, this is the important part. Even so, Target's comparable sales declined for the third quarter in a row. The key metric, which includes digital sales and takes out the impact of store openings, closures, and renovations, fell 4.4% in the fiscal fourth quarter. Target doesn't anticipate anticipate sales will bounce back quickly either. For the current quarter, the company said it expects comparable sales to drop between 3% and 5%, and adjusted earnings per share to range from $1.70 to $2.10. Target said it expects full year 2024 comparable sales to be flat to up to 2%, and adjusted earnings per share to range from $8.60 to $9.60. And comparable sales are same-store sales for any store that has been open for more than a year. So basically, this means that revenue went up because they opened more stores, not because they were making more money per store, which would have been better. In fact, the stores are doing worse for the third quarter in a row in the same store, and the only reason their profits are going up is because they're able to aggressively expand. But there is going to be a point at which they can no longer aggressively expand, and that is going to start to be an issue because their same-store sales are continuing to come down. Now, if you enjoy this kind of daily business, finance, news, and updates, I post 3 to 5 times a week, and I would really love a subscription. When I wrote this script, the first quarter earnings for 2024 had not come out yet, but they actually just came out about an hour ago, and as expected, they're not great, which is probably one of the main reasons they lowered their prices. Target earnings miss. Sales fall as consumers buy fewer groceries and home goods, and specifically the groceries and home goods are the things that they lowered the price on. I haven't actually fully read this article, but we'll go through the first 3 paragraphs. Target on Wednesday posted year-over-year sales decline and missed Wall Street's earnings estimates as consumers fatigued from high prices brought by fewer discretionary items and groceries. The Minneapolis-based discounter's revenue in the fiscal first quarter was about in line with expectations, and if you remember that here, the expectations were not great. On a call with reporters, CEO Brian Cornell said the company's results reflect, quote, continued soft trends in discretionary spending categories, unquote. He said that the company wants to make sure it offers consumers value and communicates that in a clear way with moves like its relaunched loyalty program. Target also announced Monday it would be cutting prices on thousands of everyday items, including milk, bread, paper towels, and diapers. And then it goes and talks about how the share price fall and specifically what the numbers were. But this just goes to show that they're not doing it just for the sole purpose of helping out customers. They're doing it because they looked at the earnings report that they were going to release and they realized it was going to look bad. And so to try and combat that, they lowered their prices to try and give their stocks a boost and try and get some publicity in the wake of the fact that they are not going to be particularly popular with investors once this report came out this morning. So the first reason Target's forced to lower their prices is competition. The second reason is a weakened sales forecast, which we actually saw turned out to be correct. And the third reason is just price exhaustion. And I don't have any fancy articles for this one because I think this one is obvious. Everything is more expensive. And so consumers are having to be more careful basically than ever with where they put their money and what they choose to purchase. That cuts out more expensive retailers and grocery stores like Target. And so Target knows this, and they know it's an issue currently, and it's going to become more of an issue in the future. So they're trying to cut prices to be more in line with other discount retailers like Walmart and Aldi. So there you have it. People don't have much money, and as such, Target is struggling because they charge more for their items than most other places that have comparable products. As a result of that, they've lowered their prices to be more in line with competition. They've discounted things to try and become more popular with consumers and get them coming back, and they're not hiking their prices as aggressively in hopes that price exhaustion, which is facing most middle and low class consumers, will become less of an issue when people are trying to think about where to shop and hopefully make them more likely to shop at Target. Thanks for watching.